Hi folks, welcome to another session of Investment Income for Life. Folks, before we proceed further, please help to click like and subscribe in order to support the making of more of such contents. Hong Kong Land Limited was being mentioned frequently on blogs and YouTubes recently due to its high dividend yield of approximately 6.43% and a close to 75% discount to its NAV, where the latter provides a relatively super high margin of safety for those who are going to invest in it. HKL is not a stranger to me, as during the COVID crisis, I have purchased around 4,000 units then in late 2019 at around $5.50 per share and then sold it a month later at around the same price to redeploy the funds due to my bad feel on the development then in light of the Hong Kong protests. To cut it short, HKL market prices has plummeted 50% from $7 per share in early 2019, to the current $3.42 per share as at 15 October 2023. Note that this is also after the massive $600 million share buyback program executed by the management team. Hence, this is not exactly a good investment after almost 5 long years. Most of HKL's investments properties are in offices or mixed development with some retail components. I am not exactly a fan of office space investments due to their cyclical nature. Before COVID, I have been staying away from offices and focusing more on retail and industrial REITs. However, during COVID crisis, I have thought that the office REITs, especially those in US, were holding up their prices and distribution well and thus ventured into them since they have long tenure with tenants. This forage into the office space sector subsequently turned out to be a disaster when one of the notorious Manulife US REITs breached its banking covenants and stopped its distributions totally and is in the midst of divesting properties during the trough of the current US commercial office crisis. Next, note that the super high margin of safety has been talked about for ages by bloggers/YouTubers since more than 5 years back. The market pricing for HKL has been lackluster for donkey years. In early 2019, its price hovered at $7 before dropping to $5.50 towards the end of that year. Most folks were all talking about the remarkable margin of safety offered by HKL net assets value per share. Look at its current market pricing of $3.42 per share. Add in the $600 million of share buyback program since September 2021 and one can see that its share price is perpetually stuck in limbo. Last but not least, the key risk faced by HKL would be its property development businesses in China/HK and the political policy uncertainties in Hong Kong. In light of Evergrande and Country Garden, it is not a surprise that the market is frowning down upon the real estate sector and unduly punishing HKL. The market also does not seem to view favorably businesses with property development in them, which has high risks and also staggered unstable earnings. Even in Singapore, other property developers like City Development also suffered from a significant discount to its NAV per share. Parting thoughts. Personally, I thought that with the worldwide stock markets in doldrum, there are a lot of alternative buying opportunities out there that can offer a good distribution yield and also high discount to NAV. So I will probably give HKL a miss for now. That is all for today, folks. Have a great week ahead.